speculation that it may be close to selling its Alibaba stake, about a 39% stake there, and that stake could be worth as much as $11 billion. Could Yahoo's sum be worth more than its parts? That's what the street thinks. Lou Kerner with Wedbush Securities joins us right now with this. Lou, you hear this report, and certainly the stock took off on the back of it. At the same time, Yahoo coming out saying, you know what, that is not in the cards at all. Where do you place the odds?
I think the odds are pretty low in the near term. I think that Yahoo has a few things that they have to take care of. First, talking about an $8 billion valuation, they're only in at $1 billion. So they've got to make sure that they do a transaction tax efficiently. And second, and more importantly, I don't think that they're going to be able to get public market values in a private market transaction. So I think Yahoo's probably going to wait until some more assets in Alibaba come public.
You say that Alibaba, their stake could be worth between $8 billion and $11 billion. So when you say that they're not going to be able to fetch the valuation, what do you think it could be sold for?
Are you saying it's worth that much? Because I don't think it's worth that much at all.
No, I don't think it's worth that much. I have them valued at about $4 billion, and I think that that's taking into account the very aggressive valuations that companies get in China. But you never know what companies are going to be worth in China.
The question is, though, are they in a bad position in China, just like Google was? Did they roil the Chinese by taking the side of Google in the recent cyber attacks or supposed cyber attacks? That's really where I think the market is saying Yahoo has to sell. The Chinese want it. They may overpay to get it back. The reality is they only own 39%. They're never going to control this company. They're just it's a portfolio investment at this point for a company that people want to see sell off pieces.
Well, I think you're exactly right. It is a portfolio company, and they certainly didn't make any friends in China by siding with Google in that spat. But at the end of the day, Yahoo's going to want to maximize the value they get for the assets, and they're going to need to do that tax efficiently. And I think they're going to need to do that in public transactions. When these things are brought public, they're just worth a lot more than when they're traded privately.
All right, here's a bottom line question, Lou, and that is, if Yahoo sells its stake in Alibaba, what's left?
What's left is a company that makes 41, 42 cents a share. They have about $2.50 a share in cash, and they have Yahoo Japan, which is worth about $3.50 a share in cash. You have a company that's really in transition. They're transitioning their search into the alliance with Microsoft, and I think there's some good upside potential there, but it's yet to be seen. And on the display internet media side of their business, you have a company that's really going sideways in terms of traffic, and so I still think there's a lot of work to do. I think Carol Bartz is actually doing a good job, but she's in an incredibly tough position because Yahoo is competing against thousands of smaller, nimbler companies.
All right, Lou, thanks a lot for joining us. We appreciate it. Lou Kerner over at Wedbush. He thinks that Carol Bartz is doing a good job. Patty Edwards, though, he does have it underperform